Okay, let's get started. Hello, formally hello. How are you? Welcome to this webinar. It's a pleasure to be here again with fxstreet.com. Vicky did not tell me that we're going to record today's webinar, but anyway, it's a better idea, okay? Anyway, a small apologize. I have a slight cold right now, as usual in winter in this country, so I will try to do my best. I will start a small presentation. You are welcome to make questions and comments along the way. Okay, I will be checking every couple of minutes if you have any comments or questions, and I will try to help you out solve those questions and problems. Okay. Anyway, the idea today was talking about and how we trade different market conditions. We know that usually in summer we are living summer in half the world, not this half, but the other half. But anyway, in summer, as I was saying, volume decreased and decreased a lot. Many traders are away from their trading desk, or even despite not being on vacations, taking a pause into their yearly objectives and targets. You know that, right? We usually settle down, volume comes down, and we see a lot of lateralization, a lot of consolidation in markets, and a strong lack of definition in trends. Usually, we have some movements, of course. Nothing is 100% in work. However, there are certain ways to trade short-term talking these different market conditions. I do believe, as I was told you, that it's not the indicator we use, okay? It's how we understand the behavior of certain pair with a certain indicator of what is worth it in the forex market. Another thing that I do believe is quite important that we need to understand is that big part of our trading success will depend on our ability to detect those market conditions as soon as better, okay? Just without taking a look at the indicators, without taking a look at the chart, at indicators or at current price action, right? A couple of months ago, or even less than that, early June, market attention was focused in the Eurozone. The Eurozone is weak. The Eurozone is going to be solved. Greece is going to leave the sovereign debt and blah, blah. And the Euro sank to 118.70. All of a sudden, all our attention is now focused in the double dip fears in the US, right? So, welcome euro, bye bye dollar. So that's what I'm trying. It's just an example, a bit over exaggerated one, okay? But that's what I'm trying to tell you, that it's very important to detect those market conditions, that market sentiment as early as possible. Right now, if you want to discuss whether this is a reversal of the trend or a correction in the middle, it's another case, okay? Not the idea of this one. Still, in my humble opinion, okay, pair is still holding about 38.2% retracement of that rally. So, we cannot talk about a reversal here. Personal opinion again, to avoid questions over the job subject in the next upcoming minutes. Latin America is a bit disappointed. Not much, but has been today. While German industrial production and GDP, has been really, really positive. So, despite whatever happens today and in the short term talking, the long-term trend of the euro is still not vulnerated, at least not fully. In the long run, I believe that dollar is weak and market is dollar weak and euro a bit stronger. However, technicals will decide that, okay? Just sharing my opinion about this particular pair before you ask it. Of course, you are able to welcome that opinion or to think exactly the opposite. Anyway, back to the point of the webinar. Understanding market conditions, understanding market sentiment is both. Both things are key, okay, to success in forex trading, okay? That's what I was saying. Several traders, okay, even me in a time, okay, believe in just finding one trading system, one strategy that works better for all market conditions. The fact is, I have come to the conclusion that Not all trading strategies work the same in the different market conditions, yet we can have a couple of trading strategies, right? A clear one, a good one for when market is trendy, when we see a clear trend in the market and we could take trading decisions according to that trend. And we change the settings and have another trading strategy for when market is moving sideways, uh, or in a consolidation mode, and we have not a lot of definitions of that trend. Okay, keep in mind that intraday talking 60% of the time market is not in trend. Okay, and so it's a good idea to consider the probability of using trading strategy for sideways markets. Anyway, I will check. I'm checking. Okay, no questions or comments. Good. Anyway, again, back to the beginning of trading. Okay, we have thousands, millions of technical indicators, right? Oscillators, indicators, whatever. They are a graphical representation of a mathematical relationship between different variables such as quotes, times, okay? That depends on the trend, change of weight, a breakthrough determined with reference lines. Anyway, yeah, and they show us the moment of buying or selling a determined pair, okay, in our forex trade. Uh, we call oscillators, right? The ones that only have variations from 0 to 100, like classic one, okay? And the main advantage of these technical indicators, oscillators, is that they are very easy to use and at the same time are meant to give us reliable funds or reliable basis, right? For our selling or buying decision. Okay, signals are clear, concrete when they come from indicators. So we really need to valorize, especially in the short and medium terms. We must valorize market with this mathematical tools. Again, at the end of the day, as I was told you, they are just average of what happened in the past. Some could measure one thing, some could measure another, yet they can help us to forecast the future in a certainty accurate way, but not the most perfect. We cannot forecast the future. These tools are designed to tell us what happened in the past, and it's our responsibility, okay, to study that, to study the past behavior and see our mathematical probabilities of success in the future according to that past history, okay? As much history, better and more reliable. Anyway, I'm talking too much today. What's wrong with me? Back to back to the focus, okay? There are many kinds of these ones, but I do believe that they have certain uses and more great. And I do believe that when we are talking about sideways markets, we need to take a look at the stochastic oscillator. I was plotting the indicator before starting the webinar, okay? And first thing I noticed in this chart, just with a classic stochastic, we are going to talk about different combinations, right? I was noticing the selling signal in this stochastic oscillator around these levels, right? And see what happened, what I was telling you about using sideways sideways a trendy market, sorry, indicate with sorry, back. I was seeing this fake signal, okay, because we have a clear trend. That's why I don't like to use stochastic oscillator when we have a trend. This is a cyclical indicator that tends to fail a lot when it's given signs against the trend when we have one in market. That's why I rather prefer to use this indicator when the market is sideways or trendy, okay? So, and here is the best example of how we could have a really fake signal coming from this indicator, despite price afterwards tend to fall. The fact is that this 4 hour signals in 3 days has left us losing around 200 days. So what happened next? I don't know, but really, and consider this seriously. If you have this signal and sell and you are losing 170 pips like in this chart, you will be probably closing your trade or assuming loss. 170 pips is far stop loss for euro dollar in 4 hour charts, right? It's far away one. Anyway, and on the contrary, of course, this kind of indicators tends to give much more reliable signals favoring that trend when we have one. However, the idea today is to talk about trading in sideways markets. Okay, just the general introduction. Okay, this indicator is based on the idea that when an asset is in a bullish trend, price usually tends to close near its session maximum, and when the trend is tending to the downside, price tends to close in the sold session. With this concept, George Lane, the developer of this indicator, tried to find a mathematical relationship between the close price and those maximums and minimums for each session. Okay, session meaning candle, if we are talking about 4 hours chart, not daily, right? Uh, we have multi settings for a stochastic calculator. In this particular case, I have started here with the classical setting 1473. Okay, those two lines are meant to give us signals of the trend, and I believe that what the worst problem we have with this stochastic when we are in trade is what we could see happening here right now in this particular side of the chart. As you can see, we have price continuing to rise in a bullish trend, okay, and the indicator saturating at the top, okay. It saturates. It's lost its focus of telling us about the trend, right? The trend continues rising, and the indicator is flat above the highs, unable to continue. Still, it's a bit more reliable in this particular cross, euro dollar. If we take the same look at this indicator with the forward time frames in pound dollar, you will find out that that kind of saturation is even worse. Okay, it's even worse. Pound behavior with this kind of stochastics in when pound is in trend is really terrible. Okay, you will notice that. Again, we have I changed to 30-minute charts, more where we have more lateralization right now, more sideways market, a very current and actual example for what I was trying to make the point today. This kind of indicator, okay, give us three different values of selling signals, three different ways to read signals. Any comments, questions? Okay, raw trader, you are smiling. Why are you smiling? Sorry, I didn't check before. Anyway, no questions, no comments? If not, we will move on. Okay, back to the charts. No questions, no comments. Really, as I was telling you, this indicator gives us three different kinds of buying and selling signals. Okay, we usually have a buying signal. Okay, when any of both lines, okay, the stochastic and the signal one, cut the 25 level downside up. Okay, yeah, downside up. In fact, the levels set for stochastic in theory, okay, should be 30 and 70. I have placed them in 80 and 20, not 25 or 20 will be the buying signal, because I do believe that the wider the distance in between those two lines, the more accurate are the signals, okay? When we have pairs with wide intraday range, then 2080 will be the accurate setting for the lines in the stochastic oscillator. On the contrary, pairs with smaller intraday range, then those times we could use the 37 setting. But honestly, I prefer the 2080. I'm always playing with my indicators and adjusting them a bit. You should be doing the same. Anyway, as I was telling you, the fact is that the buying signal in the indicator comes when the line, any of those lines, usually the green one, the stochastic one, cuts the 20 line downside up and giving us buying signal. The fact that the red one, the signal one, cuts just before it is just confirming the sign and telling us we are going in the right side of the market. We are in the right side and we are going to the place of the market. See what happened here. See where the pair reach and why do I prefer the 80 line? Okay, when we reach the high, okay? When we reach the height of that valley, the indicator starts retreating from that 80 level. That's telling me it's time to leave the trade, okay? And of course, if we are trading starting the chart, I do believe that both the stop loss and the limit for others, okay, that are twins with entry order. We cannot place an entry without stop or limit, okay? They three all come together as one, okay? They should not be independent. When we have a trading decision, the limit and stop should be attached to it, okay? So back to what I was saying. If we are trading a 30-minute chart and having in mind the concept that any signal, okay, should be accomplished in less than 5 more candles, okay, that means a couple of hours for euro, okay? So I could not ask for a 30-minute signal, okay, to give me 100 pips. Euro hardly moves 100 pips in 2 hours, right? We could ask it for 30 or 40 pips, right? That's most the pair could move in 2 hours, 4 candles. Again, stop loss should be accordingly to that reading, okay? So, but if we are going to trade 4-hour charts, that means we have a whole day to wait for the signal, around 16, 20 hours, and I could go for 180 pips rally, right? But not much more. Keep that in mind. 4 candles is the average, okay? My signal should last 4 hours, and 4 candles, sorry, and I cannot ask the pair to rise 200 pips in 2 hours. Could happen, okay? Could happen. Trend to continue, to develop, yet that's not the general idea. I just plan accordingly to what I'm trading, right? If I'm trading a 30-minute chart in the euro dollar, I will be going for 30 pips, 40 pips, right? And my stop will be accordingly. If I'm trading the daily charts, that's a different story. Anyway, what I was saying that we have we have buying signal confirmed by the second one, okay, and the pair rose reaching 72 rose also reaching the 80 area. So if I will go for this signal, you will find out that the pair rose around 50, 60 pips, bit more than usual average. Where should I place my stop? On the previous low. That's the concept I usually take. Okay. I watch previous lows, support resistance area. Support and resistance are very important for trading, and that's what should I place my stop. The other way, okay. The other way that we have signals, okay, in indicator usually is when the green line first catches the red one, like in this one, indicator line catches the signal 1. That's the first warning. I will enlarge a bit the chart to see if we can see it more clear. Okay, yeah, like in this particular case, okay. This is a way of reading signals a bit earlier, okay, than waiting for the confirmation of the levels break. When the stochastic line usually catches the signal 1, okay, like in this case, we have an early selling signal in this case, or buy in this one, okay? We have an early signal. Still, it's less reliable than the previous one, okay? It's less reliable than the previous one. However, if we take this signal and we see both lines, again, going and moving, current line that belongs to the trade in the certain and correct direction, that will be confirming we are in the right side of the market, okay? Still, it's an early signal and tends to stay, okay? Tends to be a fake one a lot of times, like in this case. You have a selling signal and the price rose and the indicator, the red line only grows the line here, okay? So it's a bit advanced, it's a bit more risky. Still, it's a signal. Again, I will highly recommend you to test any trading strategies before applying them to reality. Okay. Finally, we have buying of signals when we have divergence. Okay, in between the stochastic lines and the price in the chart. I believe that that's part of the theory. Okay. Still, I don't believe that we will find too much divergences with these stochastic oscillators regarding, despite what kind, how big the chart we are looking at. Because, as I told you, when we have a trend, this one tends to saturate a lot, and I believe it's less reliable than any other indicator to give us divergence signals. Okay. Anyway, let's move to something a bit more practical. You know that this 14 1473 is the classical setting for this stochastic oscillator. We could usually add, okay, as a filter, okay, a capacitor one, okay, some another oscillator, okay, another setting for the stochastic oscillator that will help us filtering the signals we see in the first one. I do like this one because this double setting in 30-50-minute charts for intraday trading because they're pretty accurate mostly when we have both signals coming together, okay? So, of course, the fastest one, the 5633, will be the first one to give those signals, again giving us an early entry. That will be confirmed a bit more lately with the other one. So maybe it's just one combination setting combination, sorry, that you could use to trade with this particular combination with the stochastic. Still, there is one a bit more interesting for for shorter time frame. Okay, Boyki Y1473. It's a classical setting that I tend to use for this particular case. A slower one that I do like to use for the euro or the pound, both crosses. Okay, in short-term trading. Okay, and per trade. What's the question there? I don't understand. Yes, it's Friday 13. Do you believe that American people is very superstitious? That's what you're thinking? Okay. Well, could be. Really, I'm not superstitious, so I don't care what they do. But yeah, you have a point in there. They are quite superstitious. Pet, now you're confused. Which one to use? 5, 9, 14, 3, or 8, 3, 3? Well, I will tell you. I will tell you what I always told you. Okay? Test them. Okay? Test them. Go grab your charts. Okay? Choose the put, place settings, choose the time frame, whatever you want to like it, wherever you want to like to trade, wherever you are able to trade. Okay? Choose the time frame. Okay? And start watching what happened and what's market behavior in the past. Okay? I have a selling signal. Okay? Do I get a result? No. But straight place. I got a selling signal. Does this work? No. Yeah. Watch that. Study the back. Okay? Study the past because as I was told you, this is a UK MetaTrader champion, you know, and usually signals read in this kind of in this time zone, sorry, are not the same that in American MetaTrader. No matter who is sharing a trading strategy here at this side of the web, okay, you should test it in your charts before even daring to apply them to your account, right? You cannot trust is something developed by someone else. Trust in what you can trust. If you don't test it, if you don't study any indicator, not this one, anyone, okay, you will be not trusting in what you're doing, okay? And if you don't trust in what you're doing, you're heading towards fail. Sorry to say that, but it's the truth. If you don't trust in what you're doing, you are not able to succeed. Anyway, yes, well, the webinar is being recorded. Joker, that's a good question. Okay, I will change the setting of the chart. Give me a second. How do you know when to switch from trend trading to cycle trading? What I usually do as a policy, okay, as a general concept of the changing. First, the time of the year, big concept. February, August are the most months, when market is less trendy usually. So this is my first alert, mental alert of maybe it's time to change. Second, Mondays. If you take a look at Mondays, you will find out that we usually have on Mondays strong lateralization. Okay, so Mondays I start with this kind of view of the market. Of course, we have Mondays with trend, but usually when we are entering the market Monday, okay, I will quickly try to look at that. Second, what I do, okay, what I tend to do, okay, is watched at the early charts at least in the daily when I start trading. Sorry, okay. If we have been at least 12 hours trading inside, I don't know, a 50, 60 pips range in the early chart, okay, and we have a non-strong event ahead, okay, that could interrupt that market sideways movement. If Asia has been sideways, early Europe has been sideways. When it comes to trading the American session, I will assume the market will have a good chance to remain, except if it breaks support, if we have a fundamental strong news coming or whatever. I will be watching that. But usually that's the idea I have, okay, before deciding whether I'm going to trade range bound or I'm going to trade range. Or another thing that seems useful for that is the time of the day. You know that by mid-American session, okay, and until Nikkei's opening, for example, you have 6 hours or so market usually ranging, okay, very usually ranging. So that's what I tend to pay attention to before deciding what or how I'm going to trade. Will depend on the time of the day and the time of the year I'm sitting in front of my computer. But that's the general idea, okay? Just the general idea. Role trader, no, I don't trade commodities, neither stocks. I keep an eye on Wall Street indexes. I keep an eye on gold and oil prices because I know they affect markets, but not much more than that. Okay, just keep an eye on them and how risk is behaving, how the risk sentiment is in the market. But no, I don't trade them. Really, I do believe that a lot of trading has to do with understanding the behavior. At least that's for me, okay? So at this time of my life, I don't see myself having time to start studying something new like trading stuff. So some say that once you see a chart and you can read one chart, you can read any chart. I don't believe in that. Okay, you can read, but if you don't study what happened with a certain pair in the past with a certain indicator, you have lots of chances of failing. I have been following, for example, gold when gold break above their all-time highs and start setting fresh all-time highs. Okay, I saw a lot of selling signals in that bullish rally in gold coming from classical indicators I use for my forex trade. Okay, most of that selling signals have been sounded fail. Okay, that's why I do believe that we need a lot of study to do that. Anyway, another stochastic combination, okay, that I find pretty accurate. I will enlarge it a bit, okay, the stochastic, so you can see what we are talking about. Okay, I know it's a bit, okay, complicated, but I will set the chart so you can see what I'm talking about, right? It's that's another strategy combining indicators. That's what I always told you that it's pretty important to play with indicators, right? Change the settings. I do that. I have changed the settings of hundreds of indicators, classical ones, and come to certain conclusions that I can trust. So I would highly recommend you that also. Anyway, this is very good. It's good for very short-term trading. Okay, the fact is that it was designed for 5-minute charts. I don't like it in 5 minutes, but I do like it in 15 minutes. I don't trade 5 minutes. It's way too poor for me. Okay, 15 minutes is the less. So I will share this strategy. You test it. Okay, in euro crosses, euro pound, euro dollar. Oh, mostly. Anyway, as you can see, we have two stochastic oscillators. 120, yeah, such a big one. Okay, 120.33, okay, and 15.33. Okay, the idea is that this 120 will be the lowest stochastic, and this 15 period will be the fastest one in this in this trading strategy. It will be recorded, and I will try to slow down. Okay. Okay. Um, the most important thing of using this trading strategy is previous signal. Okay? Previous signal. Previous signal has to be a contrarian one. Okay? So, if I'm going to search for buying signal, okay, I should have a previous one being a selling one. If I have two buying signals in a row, the second one should be discarded. Okay? Same for selling. If we have one previous buying signal and then I get a selling one, that's okay. Yeah, if I have a selling signal when previous one was another selling one, that's not okay. Okay? Signals will work if they are contrarian to previous ones. So it will require a bit of follow through before applying it, right? We need a bit of follow through. Anyway, let's see if we can find an example. Okay, before, because I honestly did not check before starting the webinar. My mistake. Sorry. Okay. Anyway, let's see if we have a buying signal. Okay. Uh, okay. Signals first. Sorry, should be reading the fast one. Okay. The slow one will be our first filter, right? The slow one will be the filter, and the fast one will be the signal. Okay, that's how this usually works. Okay, let me see if I can find something pretty interesting, an example for today. Okay, that seems clear at this point. Okay, maybe this one. Here. Okay, around here. I will move the line. Okay, here we have a buying signal, right? Let's assume previous one was a selling one. Okay, this one is that one is selling one. Yeah, we have it. I found it. Okay, so I have a previous selling signal coming from this is the case. This is the fast stochastic oscillator. Okay, and now I'm having buying one. Okay, having buying one with a previous one of selling. That's okay. That's my first condition is accomplished. Okay. Okay. Now that's once the first condition is accomplished, I should take a look at where this one has been previous candles before I have buying signal. If I'm going to have a buying signal and this is in the contrarian state, okay, is close to 80 previous to having that buying signal, that's the filter I was looking for, okay? This being quite on the contrary situation in a couple of candles before, okay? So the second condition will be that once they get a buying signal, the slow stochastic should have been in a very short term before in the contrarian side of the stochastic, meaning if I'm buying, should be not next to selling. And if I'm selling in this particular case, the contrarian should be next to buying, okay? The path is pretty simple once you get it. Hope I should make a point in here. Anyway, in this particular case, I have both conditions set, okay? I have my buying signal with the previous selling one and the slow stochastic high being close to 80 before I get this selling signal, okay? With both conditions done and with this one, okay, the signal taking place, the theory says under 30. Again, I will use the picture at 20 or 25. I don't like the 30, okay? That's me. Anyway, I have my buying signal in the cross, okay, and again my stop will be placed under previous lows, okay, and if I get my buying signals around this level, okay, in a 15-minute chart, I believe that the 40 pips rally seems pretty interesting for a 15-minute chart scenario. Again, my selling signal, like in this particular case, okay, will be if previous one has been buying one. Yeah, it has been a buying one. Okay, it has been a buying one. Okay, let's say that we have a buying signal. Sorry, okay, I know that's very bad. Okay, I have buying one previous to this selling. Okay, and previous to this selling, my indicator was way not so good, but way oversold. Okay, nearly 20. So I will attempt to sell once this candle the one with the market opens, okay, making both lines cross the 80 line. Average for this strategy, average will be 40 for 50 pips limit, sorry, and average, I always say 35 pips stop loss plus spread, okay, plus spread, because it tends to work also for, as I told you, euro GBP, right? That's the pair I apply this strategy the most, rather than euro dollar. But average, that's why I said stop loss plus spread, because spread changes for pairs and from platforms, okay? So keep that in mind, right? Keep that in mind when you set stop loss. Add your spread, okay? Also to the limit order. Anyway, boy, I'm still young to look new things. Yeah, I am. I'm just waiting my kids to grow up a bit more, okay? I have more time for myself. That, to be completely honest, I'm always honest. And why 120? No, not this, because lucky number. Because I always get the same questions. Why do I use a certain number? Okay? If you take a look at my all-day chart, okay, you'll find out that, for example, for dollar Japanese yen, I use a commodity channel index of 17 periods. Okay, these numbers come from testing, from back testing. Okay, I use 17 because I chased 14, 15, 16, 17, 18, 19, 20. Okay, and I found out that 17 was better. Okay, it gave me better signals. The same happens with the one from the 20. Whatever number you always see in my charts or in my settings, they come from my testing. Okay, what an exponential moving average of 200 instead of a simple one backtesting. Why 200 and not 100 backtesting? Why 20 and not 21 backtesting? The numbers of the indicators I use to trade, despite I try to adjust to the common settings or the normal settings, or the use the classical, sorry, I was not able to find the word. The classical settings when I'm getting webinars, and so the fact is that all those numbers count only, and because of that, testing. No, are not the same across all and any pair. Okay, I don't use the same indicators in every pair. As you can see, I have, for example, different moving averages for Japanese yen crosses. In some pairs, I use relative strength index. In some commodity channel index, 17, 14 periods. In here, 14 periods. I don't use the same. I don't play roulette, Mikey. I don't, but I'm good with math. I'm good with numbers. That's true. I always been good with numbers. Anyway, do you have any questions or comments? If not, we are going to end the webinar around here. Okay? Hope you had enjoyed it. I did. And at this point of the day, wishing you a great trading journey and a much better weekend. Okay? Enjoy your weakness and the rest. Hasta luego, John. Thanks for the Spanish. See you later or next Sunday, okay? I believe on next Sunday's market with the weekly market opening. We will be here again, okay? Thanks for being here. My pleasure.